the words he used, rang like a bell that said, "That looks pretty good at what the work I had prepared, but the deal's too small for me." I was like, "Aha, go
Yeah.
bigger, go
Yep.
bigger." So then back to that. Well, why can't I do 100? Why can't I do a 200?
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. Today, I'm excited to have a couple of guys here. We got Bill Zahller and Richard Coyne. How you guys doing today?
Excellent. Hey, Todd. Thanks for having us.
Absolutely.
Yeah, absolutely. So they are the founders, co-founders of Park Capital Properties. A little bit about Bill first. He's an active real estate syndicator, real estate investor. He's been involved in the real estate space for about 14 years, or maybe longer. He's 14 years and now Park Capital. Is that right? So
that's correct. Yeah.
20
So
years, close to
right,
it.
we started in Park Capital Properties was my LP side investing arm, and then Rich and I are co-founders of Park Capital Partners
Awesome.
on the GP side.
Awesome. So, and you are a pilot as well. Do you still do the piloting stuff?
I did. Yeah. The schedule allows quite a bit of time off, so there's at least 30 weeks per year I have totally off, and the rest can do via laptop, Zoom calls, everything else can do a lot of it on the road. But yeah, still fly internationally with the same company for 26 years.
Nice. That's great. And you're a certified capital raising specialist. I've never heard that. Certified business broker. We're going to have to talk about what certified capital raising specialist is. And you're the founder of the Asheville Multifamily Investor Club, co-host of the Carolina Real Estate Investors Association Multifamily Group. And of course, those both focus on multifamily and syndication. And Richard, he is also the part of the Park Capital Partners LLC, and you are retired, right? Software exec, more than 30 years of experience, and hold a PMP and leverage that discipline in apartment analysis, investing, and operations. What's a PMP?
It is a project management professional.
Gotcha.
It certainly is relevant in the software world and not really anything construction. I have actually used some of the discipline that I've learned from following that path. In real estate investing, it's I think it's just a great background. And again, that was kind of my thing. I just wound up moving into the kind of the project management world and running projects, over time, and getting a PMP just made sense. So, and I still keep that current.
Cool. You're also helping run the Asheville Multifamily Investor Club and the Carolina Real Estate Investor Association Multifamily Group.
Yes.
And something really awesome that I love doing. You're a senior ski patroller. I'm not a ski patroller, but I love skiing, instructor and evaluator. So that's really cool.
And actually, even cooler, I do it on my snowboard. So there you go.
Oh boy, I'm not a snowboarder, but hey, I've got plenty of friends that are, and we always hang out and go together. So good time. Yep. Just so cool. Well, welcome to the show, guys, and thanks for joining me. Let's just take a few minutes, and maybe you guys want to expand a little bit on your backgrounds and what you got going on today. And I don't care who wants to go first. You can just start.
Yeah, I'll jump in. So yeah, Todd, thanks again. Appreciate you having us. So, I spent a lot of time in the corporate world, and I enjoyed that, and but along the way, especially in the last couple of years, I was trying to figure out, all right, how do I build wealth for myself? How do I kind of grow that? My kids are now on their own, but at the same point in time, when I started thinking through this, they were in college, and I'm like, wow, I've got to, I focused so much on the family when they were younger. It's now time to kind of focus on, how do I build wealth for my wife and I, and that type of thing. So I decided I want to move toward real estate investing, and and that was a fantastic decision. Obviously we know there are tax advantages of real estate investing, and and certainly that was something I jumped into, and along the way I met Bill, and then we got to know each other, and we decided to team up, and it's been fantastic. So we've been working hard and doing deals.
Awesome. Yeah, it's funny, you have this epiphany, like, how am I going to build wealth for myself? Like,
Mhm.
I'm working this job, and I got maybe my 401k, but at the end of
Mhm.
the day, it's like, man, what am I doing? Like, I'm not getting anywhere. Yeah, I got money coming in, but I'm building wealth for somebody else.
Absolutely.
Yeah.
Absolutely.
So,
Yeah, and again, in the 401k, obviously you're very limited in the types of things
yeah,
that you can invest in. So,
right.
if the returns are good, great. But if the stock market's off, and we know it's up and down all the time, and lately it's been on fire, but at the same point in time, there have been plenty of down years, and you're right. Unfortunately, you just don't have control over that. So that's, to me, I don't like that. I like to have a lot more control.
Well, and especially with like the 401k and you can't, you're not really you're not like you're analyzing the companies and choosing companies that you feel have long-term growth prospects. You're more or less telling somebody to, like, hey, be aggressive, be semi-aggressive, or be really conservative. Like,
Right.
that's kind of what you're just saying. And then they plug and play, and quite frankly, they probably just put in a computer algorithm, and that's all it does. Where if you're actually wanting to invest in the stock market, and I do a little bit, like,
Hmm.
let's figure out what companies are good. Let's figure out what companies we
Right.
actually believe in and think are going to truly have long-term growth prospects versus just something fun we
Yeah.
have no
Yeah.
control over. I want to
Exactly.
control my money and my finances and where it goes. I feel like that's my obligation with that money. So
Yeah, absolutely. And again, there are plenty of people who don't have the time or the interest in trying to take some more control over things, and that's fine. And again, obviously, 401ks and mutual funds are fine. And again, lately they've been doing fine overall. But if you pick the wrong mutual fund, again, it could tank, and you obviously again just don't have that degree of control that I like to see. So yeah.
yeah, absolutely. Bill, why don't you dive in a little bit?
Yeah, absolutely, Todd. Yeah, probably got started in real estate investing probably 2003, 2004 timeframe. Really got heavy into it. I'd moved out from Ohio out to Phoenix, Arizona, and that happened to be kind of one of the epicenters of the growth at the time. A lot of people were doing the same thing, moving from the colder climates, Midwest, and out to Arizona. So I kind of did I guess, the Burr strategy in a way. Early, we'd buy a house, live in it for 6 months, and keep it for rental, move on to the next one. And the construction was popular back then. A lot of the best areas you could get into the lottery system, and then it's getting built. And so I'd keep moving every 6 months, which I don't recommend for anybody at this point. It was a good way to get started in it, but collected I think eight homes out there, and then had a lot we're building on. So got kind of started in that way on the single family, which was a great intro to it. Learned a lot. But at the end of the day, kind of as you start running the numbers, I became much more a fan of large numbers. And doing it, it's small houses at a time. It just takes a long time to create the kind of cash flow and wealth that I was looking to do long term, which led me down the path of looking for how to get into multifamily. And even initially, when I started the search, I was looking for somebody that had, was kind of in my position, had more of a white collar job, and then was looking to, they made a successful leap into full-time real estate investing, and came across a mentor that fit that criteria. And they've been doing very successful. Now they've got, I think, over $1 billion assets under management at this point. So I had a good systematic way to do it, a path. And initially I was looking for just a way to get, for my own account, maybe buy a 12-plex, a 30-plex, something like that. The more I got into it, the more I saw that syndication made sense. Really fell
Hmm.
in love with the product and the way you can turn properties around. It's a great investment vehicle, rich to tax advantages, and a way to help other people, not only the residents but also our investor pool. So that was kind of my journey into the syndication world, and have been doing that with Richard. About 4 years ago, we started the meetup group, and then have started with our other properties and have gone round trip on some of them now. And it's been a great run. Really enjoyed it. Learned a lot.
If you're exploring the different ways to invest in real estate, then you've got to check out my new book called Book About Real Estate. It summarizes, reviews, and condenses over 20 top real estate books to help give you an understanding of the full spectrum of real estate investing very quickly. So buy it today on Amazon by searching for Book About Real Estate by Matt Jones.
Talk to me a little bit about I guess first of all, how'd you guys meet? And I think a lot of people want a business partnership. They think that it might be a good thing. They hear that it's a good thing, but they don't know how to go about it other than partnering with like their buddy who may not have the right skills, who may not have even the right personality, who may not even care about real estate. Like, so then how do you find that right person? Take us through that kind of process, the courting process per se that you guys kind of went through, and how'd you find each other, that type of thing.
Yeah, absolutely. Just on that, basically, I think being in the right room, you always heard that saying before, so if you're looking for investors, the right room, partners. So we met at actually a local real estate investment meeting area in Asheville years ago. So we both had an interest in real estate. Both were pursuing the multifamily side of it, and then kind of, started the conversation and kept, but I'd say partnership is critical to your growth. It's going to exponentially accelerate what you can do as a team. But I think it's also equally critical to make sure, as you're alluding to, finding the right partner. You need somebody that has either skills that complement yours, as far as, you can both run parallel tracks on things, but also same work ethic. You want to make sure you guys are both putting in the same amount of effort and time and end goals and similar goals, horizons on your investment ideas and projects, which Richard and I have, and we worked great together for the last like I said 4 years, and we're just getting started on the whole syndication, building our team out.
Yeah, and just to add to that, again, absolutely, it's critical to find a like-minded person that you have similar goals and similar values and similar objectives, and you're trying to drive in the same direction. And as Bill and I got to know each other over a couple months before we said, what, let's take this to the next level. Let's go to let's see if we can work a deal together. And we, again, because of the like-mindedness, and we found that actually could work, and it's been great since.
Nice. How long did you guys met? How long before you started doing business with each other? Was it a while?
I think we knew each other for a few months before we decided to team up. And again, that was essentially, a chance meeting, at the same place, like Bill said. We both had the same purpose for going to that meeting to jump in deeper, and we wound up meeting each other. We got to know each other over a couple months, and then I think as we realized that we are trying to get to the same place, we started spending time deliberately together to get to know each other and figure out, is this something that could work? So it was you don't just meet somebody, shake a hand, and then go do a deal. You got to get to know them a bit to understand who they are as a person. So
you guys have been buying multifamily since 2016. So you've got some experience in it. You've been buying real estate for a while. What are some hurdles? What are some struggles? What are some things that haven't worked that you've learned from? Maybe one or two things that you can kind of bring us, that maybe each of you tackle that one thing that's been a hurdle.
I would say that in the beginning there was a lot of hunting, and you decide you're going to go down a path. You have a goal and objective, and you want to hit that goal and objective right away. Well, it takes a while to get there sometimes. And I would say Bill and I were working together for probably a year and a half before we were able to get our first deal. That was a lot of building, a lot of laying groundwork, a lot of setting up, a lot of talking to investors, a lot of deal analysis. We ran through, hundreds of deals before we were able to land one, and we got really close on a number. So of those opportunities, and if someone, I guess the hurdle there, or the piece to overcome is just you've got to have the persistence to keep going. If you get a deal in your first month of doing this, awesome, congratulations. But again, it's definitely something where we knew what we were looking for. We were looking for larger properties. We didn't want to just buy an 8-plex or a 30-plex. And again, no offense to anybody who does, that's fantastic too. But at the same point in time, we were hunting, for a big deal, 100 plus. And, it was a great challenge and growth experience to get there. And again, a lot of hard work, but it paid off. And again, we were very diligent about going after that, and it worked.
Yeah, there's so many people that I talk to that are like, they just expect it to come so quick, and I think part of it is just because of what we hear. Right, we listen to podcasts like this, and like the many others, and you're hearing this people that are buying these 100+ unit deals, or they buy all this real estate, but we don't actually get out of that conversation is that they spent a year and a half searching for deals, trying to build relationships, like trying to find that. And quite frankly, like for you guys, it's more than a year and a half. It's been a longer journey than that. It's not like it just came from 2016, and so it's been a long journey to get to that point. Most people don't understand that, and they think, well, I got to get this property. I got to get it within 6 months. And then they get disappointed, disheartened, and then they potentially, a lot of people walk away and say, well, this doesn't work, or they settle for something way less, and kind of like, that's just the way it is. So
yeah, in a way, it's like watching the elite athletes. I mean,
yeah.
People see the success and skill they have, but at the same point in time, they don't realize that they've got years and years and years and thousands and tens of thousands of hours of practice to get to that level. And
right.
And again, it's it's worth it, but you gotta be willing to put the hours in.
Yeah, Wayne Gretzky didn't just start scoring all those goals without ever shooting a puck. Right.
Right.
Absolutely.
Yeah. So Bill, what about you? What's something that you guys have been able to struggle through?
Yeah, I think just to kind of add on what Richard was saying, in the initial, as we were building, we were very deliberate in our approach to getting the right introduction. So we'd find, a property manager we wanted to work with. They would introduce to different brokers that were not only in our markets, but also in the asset types. Because, as you know, there's multiple, and if your listeners don't know, there's the right broker for what you're looking. If you're looking for C properties, there's somebody in bigger markets like Atlanta that'll specialize in that versus your institutional quality A minus assets.
Right.
So we found the right people in the right cities, and we would get in the car and make a road trip. We'd get down there and meet with the top brokers at multiple firms. Would sit down with them to be taken serious, and that actually led us to our first deal. Is we'd met with a group, and we happened to be down actually looking at another property. We were touring with another brokers in Atlanta, and we just happened to have it come by our desk maybe the night before, I think, and we took a quick look at it. And so we thought we'd drive by on the way. And as we drove by, we recognized one of the brokers we had met with, the month earlier in his office without touring the property. Text him at lunch. He said, "Yeah, come on back by." And we swung by. He gave us a tour impromptu, and we went home. We were excited about it. Ran the numbers. It made sense, and we found there's an opportunity to preempt the whole call for offers process.
Nice.
And that's how we acquired. And like I said, and Richard said, the first deal we did was 216 units out of the gate as far as a syndication, and that came just from the consistency of building relationships over time. If we hadn't continuously been that, we wouldn't recognized. And some obviously it was luck, just the right time driving by and seeing him there at the time, but it came from deliberate action, I guess. So between that and building out the team, I think was some of the initial struggles. Your very first deal, you need to get a key principal as experience. We can get in that later in the interview, but we had one up until 20 days before closing that backed out at the very last second, which obviously created a lot of extra work for us at the last minute and scrambling. And after money's gone hard, some sleepless nights, but
Let's dive in. This sounds fun. Let's dive into how, like, you guys bought a 216 unit building for your first deal. How did you do? Like, how? What do you mean you bought a 216 unit?
Yeah.
How? Tell
No one
me.
told us we couldn't.
Yeah, nobody told us we couldn't. Exactly. So, like Bill said, we were on our way to go tour another property. We built in some extra time in our calendar to get down to the Atlanta metro area, and we drove by this particular one Bill mentioned we saw the night before, and we saw some nice potential. We recognized our broker on site, and we messaged him to say, hey, are you there? And he said, yeah, absolutely, come on by. So as Bill said, we ran the numbers, and what we did from there, we essentially we went on essentially a mission to prepare the deal to present to investors. So we prepared a deck, and then we went through a raise process, working with some close colleagues, and we were able to bring the money. So that particular deal was a $12.5 million acquisition. So we had 3.2 million of equity we raised for that deal, and we had some hair on the deal, like Bill said. Our key principal, I think it was actually 2 weeks before close.
Yeah.
So we had to scramble, but fortunately we had, through building contacts in a network, we had identified some people that were able to step into that role. And again, keep in mind the key principal isn't just somebody with money, but it's also somebody with experience. So, fortunately we had that a person was able to jump in, and we got the deal done. So it was some sleepless nights, like Bill said, but again, pulling that deal down was awesome. So
Yeah, absolutely.
Have you guys gone full cycle of that deal, or are you still holding it?
We
did.
Yep.
We did. Bill, you want to talk about that one?
Yeah, exactly. So back, was it September, the final closing? Yeah. So September of last year, end of September, we sold that first deal. And this, again, mid-COVID. So we were still able to exit. We had a projected 18% return for the LP investors, and our IRR was north of 23 and annualized north of 25% return. So our business plan was solid in the beginning on that. That was our key principle. They were the area, and it was it's a C-class area, working class neighborhood. There were definitely struggles with it. You learn a lot from doing it, but it still was the right property. We, going in, we know we had a $200 delta between the property that we literally shared a border with on the eastern side. Their rents were $200 higher per unit, and even $450 for the 3-bedroom units. We had 1, 2, 3s, and 4s. So we had a good entry point. We could still even increase just $100 rent premiums would give us at a 6.5 cap, which we valued it at, was close to $4 million in equity. Our value created 125 or close to $5 million in forced depreciation through the value add strategy, which is our model. Had a lot of room day one, like low flow toilets, aerators, shower heads. They were losing close to $89,000 previous owner when we took over in water usage between what they billed the tenant and what they were actually collecting. Wow. We went and attacked it from both ends. Like I said, from the growth side, we added, which was still in line with market, $5 to the 1-bedroom, and then $10 extra for the flat rate for the 2, 3s, and 4s. And then on the bottom line, we lowered the usage of the water, and basically we were to get $60,000 of that back. What we captured, again, that was close to $923,000 at a 6.5 cap, and you figure that back out. So there's still ways we create the value, and just again, overall, looking at the markets, the timing. We initially planned for a 5-year hold, but where we were and what was happening, we thought the best course of action was to exit it basically just over 2 years. At 25 months, we held it, and like I said, we were to get out with an annualized 25% return to the LPs.
Yeah, that's great. That's great. It's you mentioned some stuff there that I think a lot of people don't really think about, and I try to talk about quite a bit, is some of the operational deficiencies, right? We always focus value add. It seems like it's so focused on raising rents. How can we raise rents? How can we, maximize that? Which, obviously that's part of the equation. But in my opinion, the best part of the equation is how can we minimize some of our expenses that are actually out of control, right? Like you mentioned on the water, just doing little things. to cut down your cost to then recover that water bill. Those are huge items. And guess what? During a recession, those things aren't going away, right?
Yeah.
Rent can go down during a recession,
Right.
but your expenses, they're not going to just skyrocket up. Well, likely not. They're not going to skyrocket up. So if we can mitigate those, minimize those expenses, that's huge. And that's
Well,
something you guys did a lot.
Todd, let me talk about that a second. Also, one of the things that obviously people don't think about it, but an expense is replacing a resident. What happens when a resident moves out?
Huge
you're gonna have to turn that unit, and if they've been in that unit for 10 years, then the place is trashed. Especially in a C property.
Yeah.
And some of the things we did were to obviously try to do a few resident appreciation things here and there to let them know that we appreciated them. We also, we put $1 million capex into the property, and very early on, probably just call it 6 months in, we bought in the fall. We executed the water savings program like Bill talked about before the year was over. In the spring, we really moved into some heavy capex, including painting the property. It was a lovely harvest gold 1970s property, 72, and then we moved it to a more modern gray, and that made a world of difference. And we had a number of residents say to us, or to the property manager on site, this place, I was going to move out, but wow, I see you guys are actually putting money into this place to improve it.
Yeah.
Thank you for doing that, and I'm going to stay. So we heard that story a couple times from different residents, and again, the idea of not having to backfill a resident is can be a savings right there, a couple thousand, easy.
Yeah, those exterior improvements can make a world of difference. It can get
Mhm.
tenants excited. It gets you excited. It gets the neighbors excited, and it gets the tenants excited too. So
yeah, and we were doing interior things too. I mean, as we
Yeah.
were turning units, we were making them much nicer by going to a more modern color scheme and things like that, and better flooring and better fixtures and things like that. And and for somebody that did renew, we would go in and replace light fixtures just to make them feel a little bit better about the place. And a few people actually on property changed units to go to a nicer one. Not very many, but a couple changed to an upgraded unit. So that worked well.
So nobody told you couldn't buy a 216 unit building, but nobody told you, or maybe people did tell you could. What's the mindset? How did that, is there anything in particular that you guys can think of that made you go 100 plus? We want to do 100 plus, and we're committed to that.
Yeah, I've got a little ancillary tale there. And as I was trying to build my knowledge, this is really before Bill and I started working together. I actually was trying to kind of learn about underwriting, learn about doing these deals, etc. And I showed one particular person, sort of like a deal package that I kind of worked up based upon effectively an established pattern. And this particular person was a very experienced, apartment person as well. And he said I just call it a 12 unit that I was underwriting, and I had written and prepared this package. And the words he used, rang like a bell that said, "That looks pretty good at what the work I had prepared, but the deal's too small for me." I was like, aha. Go bigger, go bigger. So then back to that, well, why can't I do 100? Why can't I do a 200? So that was, kind of a big message to me. So, and again, obviously Bill had a similar mindset of going big. So we said, we're going to do it.
And I think some of the efficiencies that come with that also is, that, just as a rule of thumb, for every 50 units, you can have one full-time employee. So with 100 minimum, we have one inside for leasing agent, one maintenance person outside. So it'll just seem like it'll be a little more efficiency in the operation. And then as you scale, so the 200 units, we had, 2 inside, 2 outside, and also had a part-time to help with some of the maintenance. Initially, with a little heavier lift in the beginning as we're turning things. So some of the efficiencies of scale, I believe, come into play as you get over the 100 unit count also. And then depending on who you're exiting, we always need to have different multiple exit strategies. And then who's going to buy it? It's if you have a 12 or a 30 unit, that's going to be, more your mom and pa investor, somebody maybe getting into it. It's a different group than and especially as we get into nicer assets now that are, you know, in the 90s and 2000s, that you have different exits as far as is it going to be. It could be, you know, if you bring it up to core plus, it's an institutional exit. Is going to be another value add. So it's going to be, you know, so he buys a pension fund for just for cash flow or something like that. So different ideas on that too. So the larger gave us more of an exit opportunities.
Yeah, for sure. For sure. Bill, I forgot to ask you. I was going to ask you earlier, and we got into the weeds and some of this stuff, which is fine. I want to know, what is a certified capital raising specialist?
Right. So
like, where do you get that? How do you, what is it?
Yeah, Richard Wilson's family office club. Richard and I had joined that a few years back, and when COVID hit, I had several months at home with nothing to do, as aviation kind of shut down for a while.
Yeah.
So dug into several of their online courses they had. One was a business broker, one was a certified capital raising specialist, and it was it was a very interesting course. But basically, it's just again aligning the kind of the top of your funnel, kind of like also what you're doing with the, you know, the podcasts, your books, presentations. But it's I guess just setting up your how to reach out to people, how to add value, and then get them kind of into your ecosystem to the ones you can help, or once you're interested in learning more about it, they could, you know, get your investor lists as you can present deals and opportunities, education to them.
Was it worth it?
It was actually free for being part of the club, so absolutely. No, but it was the time, even the time commitment. It was. I learned a lot from it. He's been doing a long time as far as capital raising. Yeah. It's something that we're always, you know, looking forward in and this kind of business syndication. So there's a lot of good information in there.
So give us one or two kind of success tips for operating your business effectively. So we're talking business. How do we operate the business effectively, efficiently to have success?
I'll throw one out. I think that is know your audience, know your market, know your customer, know your residents. You know, we, in that first property we talked about, we had envisioned effectively going to kind of, you know, ABC, classic, you know, premium, elite, whatever you want to call it, in terms of trying to go to levels of finish in the apartment complex. And we worked on the thought process that we were going to go and, you know, take our classic units up to certainly to the premium level. Then we thought we'd take a run at you know, doing an elite level. And really what that meant was just a few nicer finishes inside, and, you know, kitchen backsplash, and, you know, a few other things, you know, that would have just made the unit a little bit nicer. And we found that nobody cared. You know, the potential residents just said, you know what, I'm going to pay $50 less for the premium unit, or whatever it was, 50, 75. I can't remember what the delta was. That's fine with me. I'm not going to go for the premium unit. So we stopped doing premium units. It just didn't make sense. And, you know, I think again, you take that and apply to a B property. You know, is that B property the kind of property where you need to go to a hard surface, a quartz or a Corian, or not a Corian, a quartz or a granite countertop? You know, understand the market. Is that something the residents are going to pay for? And, you know, so that was definitely something I think we always try to keep in mind. So
yeah, and you can easily test that, right? You can test a couple different units. You can put in the laminate, you can put in quartz, and you can see what people like.
Right.
Bill, how about you? What's a success a tip for operating successfully?
I would say you need to be very clear in your communications with your property management team. And then we were, I guess, and especially hyper focused on making sure that was implemented. We had lots of contact, lots of visits with the on-site property team. We would weekly calls at the very minimum. We had Monday morning reports. We give her all the matrix of the property, how it was being implemented, where the turns were. But I think just really staying on top of the numbers and where you are in your strategy. Don't assume anything is happening the way you envisioned or even communicated. I'd say that the best part is almost over communicate in the beginning till you get a feel for how the team's performing, and just stay on top of everybody, make sure they're implementing the way you envision the plan to work. Because there will be changes, there'll be hiccups, there'll be places you have to pivot, but the quicker you get ahead of that, the better it's going to be for you long term.
One of the things I've done, and this is just like a bad habit of mine, and hopefully I've learned from it. I feel like I have, but maybe you guys are the same. But I get this vision in my head, and I start talking about it, and I tell people, and I'm excited about it, and my team in particular, and I've just obviously they're gonna see what I see, right, and they're just gonna go along with like they got it, and I don't like spend enough time actually truly explaining it, writing it out, like mapping it out for them, like drawing it. You've got to like, they don't see inside your brain, but for some reason I think they do. Like I can see it. As I talk about it, it's like, it's right there. Like, how can't you guys see it?
Exactly. So obvious, right?
So obvious.
Yeah. We found that exact thing with planning a particular project we were going to do at the first property. And that was, we were going to build a pavilion. So we had a pad that had been an asphalt pad just sitting there in a space behind kind of next to the pool and kind of, right there in the open, completely unused. So we're like, wow, we could do something with that. Let's make a nice, build a pavilion. I don't know, 20 by 30. I can't remember what it was. So we, cleaned up the pad. We had a few patches to do in the asphalt. Easy, no big deal. Well, as we were, talking, we had a vision for what it was. We explained that to the property manager. Then their job was to go get a couple bids, and we came back with, somebody wanted to do something over here, and the bids were all over the place. We're like, wait a minute, that's not what we wanted. Yeah, let's get this back to. So we had to. Mistake. We fixed it. We had to go to really more of a written description about, okay, this is what we're looking for. Let's be very clear. This is what we're trying to get to. Go back and rebid, guys. This is what we asked for. And if you're not going to comply with what we're asking for, you're out. And we did have to throw a couple bidders out. There were a couple people that just couldn't take the direction we were providing to say, we're looking for this. So.
Yeah, for sure. Yeah, clear on communication and know who you're serving, and those are both great lessons for people to know and understand. And it might take a while to actually to become good at them. But okay, so we got to wrap up because we've already been going for longer than I want, or close to it. But good conversation so far, so I appreciate it. What's a book recommendation that you can give to our listeners?
Yeah, I'll throw one out. Rich Dad Poor Dad. Well, of course, everybody says that, but at the same point in time, it is a great book. It does give you some good mindset. But one book that I've always enjoyed, and I'd highly recommend is there's a book called The Road to Ruin by James Rickards. It was written in 2016, and really what it talks about is the international monetary system and the financial train wreck that was coming, and it's amazing some of the stuff that is in the banking system and the international monetary system that is out there that really is works against a lot of people in terms of trying to build wealth for themselves in terms of the banking system versus you and I trying to build wealth. So you got to learn some tricks there. And the guy is a phenomenal author, and he's actually has written a follow-up book that was just released, really, kind of with some of the lessons from COVID, because we did see a world financial crisis. We have seen a world pandemic, and we see all of the havoc that's wreaked on the economy, et cetera. And that the new book is called the New Great Depression. It's pretty insightful about some of the things that have led us to where we are over the past few months. So James Rickards, definitely, the guy's brilliant. He's written a number of other books, but again, The Road to Ruin, and then was a great book. So, yeah,
cool.
Yeah, and I guess kind of on just understanding business and monetary policy, two they're very similar in their approach to that. One's more modern. The Creature from Jekyll Island, it was with G. Edward Griffin, about the start of the Federal Reserve System and how that's affects basically everything that goes on in our monetary system. And the other was the ascent of money. Now Ferguson, like the beginning of how that from early days, how money came into being, and how we use it to this day, how it's evolved. Both were excellent reads, just kind of getting a higher level understanding of how everything's intertwined and works together.
Great. Awesome. We'll get that in our book libraries. Last question. What are your 3 pillars of wealth creation?
Well, for me, I'm heavily in real estate. I do have a little bit of some money in a 401k, from previous employers, that type of thing, but again, I've really found that real estate is the place to be. Certainly doing these deals, we have money in every one of our deals. We feel that's really important to explain to our investors as we're asking them to invest with us, that we are investing in the deals. So certainly that's the thing. And then I'm also exploring the idea of doing something in notes, real estate related, but doing something with notes, the concept of basically of being the bank. And so, yeah, that's kind of what I look at. Maybe a little bit of stock and bond dabbling, but again, it's much more focused on real estate. So.
Awesome.
Yes. As far as the creation thing, been invested in stocks of the company, the 401k side for, close to 30 years, and have always had an interest on the side, investing in the market. So enjoy that. Real estate obviously is a large portion of it, on the syndication side, which is also our business. And then we also have invested passively in other syndications too, for geographic diversity. As far as our, like I said, we eat our own cooking too, invest in all our own deals. So heavily involved in those 3 aspects, and then just a mindset on the growth side of it. I think I've always been more of like the Grant Cardone style of, you can grow the, as far as business, you can grow the top line, infinite. There's no little cap to how much you can make, versus the Dave Ramsey part where you can shrink your expenses. You can only shrink your way so far. So I think just the growth aspect is critical, as far as, I think they're both correct at different stages in life. I think you need to get expenses under control initially, but once you get that, you can't save yourself to, real wealth and allow to do everything you want by cutting out your cappuccino every day. But you can't grow the top end. So that's always working on education, growing the top end. And we say it every meeting Richard and I host, that, we're not in the real estate business, we're in the relationship business. So I think developing the time for relationships is what's critical as you move forward, and you'll get the most return for that over anything.
Yeah, absolutely.
And Todd, let me throw one more thing. We also are always on the lookout for like another stream of income, something else that may bolt on to our business, that perhaps is in some way related. There are different ideas out there. We want to be careful about shiny object syndrome and just chasing after something that we don't know about, we don't have any knowledge about. But again, we are always on the lookout for other things that can add value to our customers, as well as to certainly wealth creation for ourselves. So
yeah, absolutely. I love it. Well, guys, look, I've really appreciated the conversation, taking us through your journey, through that mindset of buying 100+ units, buying a 216 unit for the first, deal, which is just amazing. How partnering with each other worked, and then the knowing who you serve, being clear on your communications, building relationships, growing that top line. So really great stuff. And I appreciate you guys sharing with us. I know I got a lot out of it, and I'm sure our listeners did as well. So I appreciate it. You guys have a fantastic rest of the day.
Thanks, Todd, for having us. Appreciate it.
Absolutely.
Take care.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience, and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to ventured.com venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.